Hello and welcome back to Theo's day trading recap, where we day trade crypto every single day and I try to document it so that you can do this too. So today's P&L is going to be right here. It's a two-part trade. It's a de-risk trade and also a bit of a swing trade. Something I actually held overnight. It was around in the early morning of the 26th of February. So I am not awake during this trade. However, I did see a very great opportunity that is going to be very short and sweet. We're going to keep these short and sweet. The idea is to have a bit of a playlist so that you have a bit of variety of the different types of trades that I am able to take, and that hopefully you can see this on your chart one day and be like, hey, I remember when this happened on the 26th of February when I watched Theo's video, and boom, and there you go. There's the experience. So let's get straight into it. So very simply, we do not care about the direction. Okay, the only thing that I trade and that you should be trading is reactions that are confirmed via liquidity sweeps, higher time frame imbalances, but just trade reactions. Yes, if you watched my previous video, whether it's the one before this, but the one on the 24th, there was a New York session long opportunity here, which ended up being a bottom tick that I did not hold because that is not what I trade, unfortunately. So that is something that I have to work on, and I admit that. However, after this uptrend, obviously the first thing we're thinking about is, where is the correction going to happen? Is it going to happen here, here? And how do we tell that? That brings me to my first category, is how do we tell when the reversal is happening? Because in hindsight, thankfully I'm doing this video a bit later than when I actually hit the trade, because you'll end up seeing that the trade that I took on this day actually ended up being a top tick short opportunity into this whole downtrend up until today, the 28th of February. So definitely got to work on that, although I'm just not used to holding up across multiple days. I usually just get in and out, maybe 1 hour, sometimes even 15 minutes. There's perks and there's also cons to this sort of way of trading, but I think it's very consistent because we just see and we react. That's the whole point. See, react, see, and react. That is what exactly you should be looking for. So what is the first thing that becomes very vividly apparent on our screen right now is we have a rejection block / rejection candle on the higher time frame. So this is an hourly rejection candle. Now I want you to get accustomed to recognizing this specific candle, because we can see on Bitcoin there was the same exact candle-ish. This is a rejection candle, but actually closed bearish. But that's not important. The importance is the quick reaction that we had from sweeping out this key level. Why is this a key level, you may ask? It's simply New York PM's high, which is an area of liquidity, time-based liquidity. If you want to look that up, you can. And over time, you will recognize that this candle right here is the holy grail of rejection candles, because not only did we also not have a wick on the bottom, but you'll see that if we zoom out and go to a 4-hour time frame, it is paired with a 4-hour rejection block / sweep liquidity on this high. And for that reason, it is very potent, because you can see after that, we've just cascaded, almost even targeting this low eventually. We will see. I will not give a prediction, but my point is, how do you understand these in real time? Now, one thing I will highlight, it's not a golden rule that every single rejection candle on the hourly is something that you should take, because for example here we actually did have a rejection, moved upwards, but then ended up trailing down and taking out that low. How do we discern these ones from maybe these ones in between? And one of those reasons, what I just highlighted, is also coupled with a 4-hour draw on liquidity on this high over here on the higher time frame. And you will see that the candles that matter the most when it comes to rejection candles are the ones that will start to become more apparent to you over time. And I'll just highlight this one thing right here, but I just see this visually because I've seen it so many times. Here I see a range, and then this one candle swept above and took out that range before distributing downwards. Then I have another example I think I just saw here. We have a range as well. Then before we dumped, what we had one rejection candle, single rejection candle, that moved up and swept out all this liquidity. I think if we move down further, we have a bullish example here, and this should become apparent. I do understand that if this is not apparent to you at first, that is completely fine. But over time, you'll realize that, see, we have the same exact thing again. We have a range of lows. So these are all rejection candles, correct? But they formed a range. And what do we want out of a range? We want a sweep. You can see that right here. We moved down, swept out just all that liquidity before reversing in the opposite direction and going parabolically long. So you'll notice this over time. But the rejection wicks on the hourly, especially, that matter the most, are usually coupled with some sort of range break / range break manipulation. And this is where we get to AMD and all that sort of stuff that you should be accustomed to because you've watched my other videos. The goal is to understand now in the next 5 minutes, just quickly, briefly, how did I enter this trade? I will go in real time with you on using the replay feature right now. Let's go replay right as the hour close. So ideally, you should always be entering on hourly closes. That's what I tell my students. That's what I tell my friends. That's what I tell everybody. I tell myself. Always wait for the hourly close, because what we are looking for, and I've said this time and time again, we want some sort of retracement to maybe the 50% of this wick, some sort of retracement to make that top wick, right? Because obviously, understandably, if price moves up, we'll get a full body candle first, right? And then when it flips, we're going to get a full body candle like this with a wick. And the idea is this looks natural. I think this should look natural to you. On a chart, we usually get this sort of structure, and then this candle should expand somewhat like this. It's very rare that we get a candle with no top wick and just expands downwards. So usually your entry will be somewhere around here. Is just visually, just so you visualize it. Now, in getting into the technicalities, the first thing I see is an inverse fair value gap that got invalidated. I think we closed below. So that's already an area to tap into. Point is, you can't really drag your stop out here because it's way too far. But let's just see how it plays out first to see if it taps into this gap. I don't remember it does. Kind of runs through it. And I think we get, so we kind of get like a invalidation, but then still respected. And some people will actually mark out this mini fair value gap, again, marked it out. And as soon as it gets ran through, I think PB trading does this sort of strategy. I just know it's about a lower time frame version targeting, imbalances, because we have a fair value gap here, we have a fair value gap here. So in general, these imbalances are going to be filled eventually. But in this case, my stop was a bit higher, so this is why I de-risk. So instead of doing 1,000 Solana, in this case, I'll be risking about $800 to 1,000 to make a dollar stop. Here, I'm doing 500 Solana. Chill, because I'm leaving it open. I'm not really managing it either. So I'm putting my stop to around 90 cents. So it's double the usual. I usually do 50 cents, but since I'm de-risked, I can double that. That makes sense. So usually I risk $500 to make 1,000 on average. But in this case, since I'm de-risked, I'm risking still $500 to make 1,000, but just on a larger scale, if that makes sense. So stretching out my stop, 90 cents. In order to make this trade on a longer term scale, repeatable and profitable, I have to keep a 1 to 2 to risk reward ratio. So I didn't just do 1 to 1, which is why I ended up pocketing $2 on this trade. I do not place my TPs simply based off the fact that I need $2 now. I also place off the fact that I am targeting the first area of liquidity, which is New York PM low. And also we are targeting this sort of fair value gap. There's no other fair value gap before that. This is the first PD array / 1 hour fair value gap that we could target. And that aligns with my TP. I think I TP around there. And now we are going to play out this trade just to see how it performs. You can see it actually ends up speed running straight towards my TP, but just edges it, and then ends up just smashing it right afterwards. On the new hour open, you can see same principle. We opened, wicked up first, created a top wick, flipped, then went straight for my TP. Another important thing, which I just realized, is remember that imbalance I was talking about earlier? You can see if I mark it out, we actually tap just around into the OTE level / 50% of this higher time frame for value gap. Targeting imbalances in this case would work. Obviously, I was targeting this first imbalance, got absolutely smashed. And that's the goal, because I am really just looking for a 1 to 2 ratio. Although most people say, why don't you TP 1, TP 2? Personally, I execute maybe once, twice a day. I really don't need to, and as long as it's consistent for me, and I admit that's something I will work on. But hopefully this explains the layout, and hopefully you can apply this. You can see that, thank God, we took profit here, because if we got greedy, you can see it completely reverses back and basically nukes all our profits. And in general, if you have to wake up and just stare at this chart, I personally prefer my sanity. Up to you. I've had people that stay up for hours just looking at the chart. I like to do other things or just sleep. So, and yeah, hopefully that helps. If you have any questions, obviously just shoot me a DM on Discord. I'll always be available. And yeah, happy trading. Hope this helps. See ya.